Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Tuesday, February 5th. Another weird trading session yesterday. Real quick with the numbers. NASDAQ up 11, gold down 2, but the gold mining stocks actually really got taken to the woodshed yesterday. S&P up 7, dollar down about 12 cents, and the Dow up 38. This came in effect yesterday morning, where Sunday night our China numbers came out, and the futures were down about 5 handles in the pre-market, as I mentioned yesterday in the morning call. Basically, the markets turned around, shrugged off that news. We had no economic data, really nothing to trade off of other than just a boring follow-through from Friday. And when Friday's sort of that grind higher came in, we followed through today. Nothing really to push us back down again. Really dried up a lot of sellers in this area. Now we're actually at the 1525 again in the S&P, likely to test the 1530, and I'll get into that in a moment. But some little strange developments. We had Apple literally down more than 2.5%, testing the lows, actually at the lows, and it's just really weird to see Apple continue to grind lower like this. And I said with Apple as well as GDX, and I'm looking at the gold mining sector, and again, partly due to the China developments on Sunday night, literally the iron ore, steel, gold miners, silver, really just got taken to the woodshed again, and they're actually starting to look attractive to the long side, and I do think obviously they will be a long play. I'm not interested in catching any type of falling knife right now, so we need evidence of price to literally start basing and then reversing. But it is looking better and better, but I wouldn't be looking to get long right now, today or tomorrow. However, for a trade, and I'll get into the GDX with you in a moment, we're at the lower end of the Bollinger Band, and usually if we break out of the band and close back in it, we would produce a buy signal. So that's something to look for, but I'll get into that in a moment. So I would think today, as far as the way the markets are shaping up right now, I think a test of 1530 is probably likely first thing in the morning. And then if you have that run up to the 1530 and then fail, I think sellers would probably step in and then and really start to push this market lower. However, if that fails, then I think a sharp reversal will be in play, and then we can get a retest of the highs. Now, if that fails, then I could see really a sharp downturn, probably getting really ugly and quickly. So we need to see some further developments taking place, and I'm going to show that to you in the charts right now. But I want to just let you know what we have today, as we do have some econ data out today. We have ISM services. That's really the only thing we have out today at 10 o'clock, and then it gets more interesting as we get the beige book on Wednesday, Thursday continuing claims, and of course on non-farm payroll. So that's going to be at least a pickup in economic data where we can trade off of. It's really just been very, very slow. All right, so let's take a look at China, right? Here's the Shanghai Composite, and look at the big engulfing candle down here. And this is so interesting, the developments, and this is something that we really need to continue to watch. Now, and I always stress this, if you're a long-term investor and you're looking to just ride out the storm, really not to do anything. But if you're a position trader or if you're a swing trader and you're looking to get long up here, you have to use caution, because the markets are highly elevated and really ripe for correction. Does it happen? No one knows. But it's just either, buy some protection or tighten your stops up. That's really the way to handle this, because there's red flags all over the place, and obviously having a 2-day down day really didn't do much to your portfolio, obviously, because the markets recouped and we started rolling back up again. But just something to keep an eye on. Here's the Shanghai, and again, guys, with the Shanghai really breaking down like this is actually a big red flag for me. Copper again broke outside of the lower trend line of the symmetrical triangle. We did get a little bit of recovery bounce, but again, testing the back end of the lower end of the trend line. So to me, that's another sign that that's something that we got to be careful when watching. NYMO, right up in this area here, really hasn't done anything the whole month of January and February. So we're just kind of literally just sitting in this area. So a big spike up or a spike lower, would really try to get me some more clues here on the short-term movement of the market itself. Now, I want to show you the dollar, which I didn't get a chance to show you yesterday, but the dollar is in its resistance zone here. So a logical pullback in the dollar will help the equity markets push higher again. So we did get a little weakness yesterday, as you can see here with a red candle, and we are quite oversold. Overbought, and we're back at the 74 on in the RSI. Stochastic's well above 93, so we are getting to a bit oversold and likely due for a pullback, which would help equities probably push through that 1530 in the S&P, and then we would reevaluate it. I would not want anybody who is trading long on the long side at least to get complacent here in this market, because the market is made to fool the masses. Just keep that in mind. All right, now I want to show you GDX and gold. Gold is now broken down into this area here. Now, gold didn't have much of a move. Gold itself, the spot, was down 4, but it really didn't move too much. But what really moved was the miners, and I wanted to show you the GDX. In S1 support, but look at this chart on the daily chart of GDX. Horrific. Here's the GDX GLD ratio. Really horrific, guys. We are getting into oversold territory, which makes me look more interesting that when everybody's running for the exits, this is going to be a better looking ripe for a long trade. However, again, I need to see price really start to stabilize here before we look to buy. Because if you don't think GDX can go lower, think again. This market is totally insane. And if the market goes down 5%, assume it will go down another 5%. Or if the market goes up 5% or stock gaps up 5%, it could go higher. There's no way of saying, oh, it's overbought, oversold. That's not a sell signal and or buy signal. So this here, I'm waiting for another push lower, and then I would look to see where it stabilizes. Now, we could get a push lower today, and this is what I wanted to show you, the GDX Bollinger Band. We are at the lower in the band. If we could break lower and even close lower today, and then Monday, tomorrow, follow through a little bit to the downside and then push back in and close in, that would actually signal a buy signal on a daily chart. So that is what I'm watching the next couple of days. And as you can see here, we're really, really at the lows of this bullish percent BPGDM, which is the bullish percent gold miners index. We are almost at the lows here. Okay, so this is really interesting to see. And in the next few days, probably going to be setting up for some sort of a long trade. All right, let's take a look at the VIX. As you can see here, another big engulfing red candle. Volatility has collapsed. If you remember, I mentioned here, I said we closed outside the band. Watch the inside close, and that would probably produce a buy signal in the market. Sure enough, it did. And then we just kind of collapse again. So volatility is non-existent again. We have 2 days of volatility, and the market just, again, collapses and grinds higher on the low volume. Okay, now I want to show you the put call. As you can see here, people are buying protection. If you can see, we're up here at the 112 area. We closed down 5 cents, but people are buying protection. When we were really complacent, we were getting down to these areas. These are extremes, but now the markets are starting to pick up a little bit on the CBOE put-call ratio. All right, so I just wanted to briefly go over one thing here, and a few calls during the day and some emails and saying, what do you think about the markets? Why aren't you looking to get short? And the markets appear. Well, I'm not. Here's a 60-minute spider chart, and this is one of the charts that I look at intraday, where I'm trading at. And this 60-minute chart, this is yesterday's price action, did not tell me to get short the market at all. We had one hourly down candle, which we would need a low to break through this main pivot. That low of that candle would entice me on a closing basis to actually get short the market. We did not get that. We actually reversed, and we've been grinding higher ever since mid-afternoon. So this did not tell me to get short. Now, can you take a short play with relative weakness in the market? Absolutely, and I look for that all the time. However, what happens is the market in itself, short plays will usually get stopped out eventually as shorts start to cover when they see the market start to rally. Even though you have relative weakness, it takes a little bit longer to work in your favor and a little bit harder for the shorts to work. Same thing here. When we had a close lower, we gap lower. That was the low of the day. The 60-minute candle, never saw it again. We had a little bit of a push up on low volume, as you can see here. That one big candle was the opening. Volume died. And then now you have, what are you going to do? You're looking to get long the market, and the market just went sideways for the rest of the afternoon on Friday. Nothing going on, totally dead. So this is where you look at, and this is what's going to give you a bias for that one particular hour, and want to show you, okay, what am I looking to do? I'm looking to get long, or am I looking to get short? And even though you're looking to get long in here, markets the stocks have either rallied and or have done nothing, and most of them are going sideways, where most of the price action's in the ETFs. Here's the 15-minute spiders. As you can see here, same thing. 15-minute just confirms, complements what the 60-minute's doing. We just grinded in between opening range from the closing range from Friday, the opening range from yesterday, and then we just literally did nothing until we broke out and just grinded higher on low volume, as you can see here. So this is not great price action, and that's why I say be nimble, be patient. The market is going to give those traders who wait are going to get rewarded very well. And I'm going to tell you that, and I can't stress enough. If you start pushing trades and you're losing money in this type of environment, guess what? It's going to be very hard, very difficult to make that money back for that trading day. Okay, so just keep that in mind. All right, so let's take a look at the GDX, and here's another chart off the Ninja, and I just want to show you we're starting to shape up a nice big bullish falling wedge. But again, you see how we close at the lower end of that band. I want to see it break below the wedge today, close back in it, and then really start to take out. There's plenty of room to run, at least for a dead cat bounce to the 40, 40, 20 area, let's call it. So you're looking at least easy 5 points here in the GDX. Big engulfing here, looks like capitulation, but I want to see a little follow through today. Maybe a big spike higher on the opening and then a reversal. That would be a good trade for the day today. All right, take a look at the Spiders daily chart. As you can see here, we are now testing the 153.25. So 153.25 is probably going to be the test for today, and then we'll see where the market goes. But look at the volume, guys. Volume has literally deteriorated on this move up, and this is another reason why the market scared me. Look to buy any longs here, or even look to take any long positions. And we have the 60-minute chart, the longer-term view. And as you can see here, this is going to be the area that I'm going to be looking for today, 153.30. And 150.150 is still a valid point. Look where the market went yesterday. Stopped right at it, which is main pivot. 149.80 is going to be another big entry area to get short the market when the time comes. And then, of course, support will be 147.20. So this is valid still for support areas, guys, if the market starts to roll over. And we have our S&P daily. 1530 will likely be a spot where we're going to test in the cash. 1495 is still a valid support, and my first target will be the 1475. It will happen. It's just a matter of time, and that's why patience here is critical. We do not want to be looking to just go run out and short the market, and I'm not really looking to buy the market here either, guys. The market is at these extreme levels. Many signs of red flags going on, and to me, that's not a cue to get long and to get aggressive, especially and or being short and aggressive. So that's where it puts in some sort of in that mix in the middle, and where you're just saying, hey, you know, it is what it is until the market realigns itself with my analysis anyway. Okay. Now let's take a look at the transportation sector. Again, on fire. Big engulfing, 2-day pullback, another big move up higher, and took out the highs. And we're actually at the end of the upper end of the band. And we unwound our overbought readings in our MACD now stochastic. So this looks like pause to be higher as well. Keep an eye on the transportation sector, guys. That's what's pulling everything up as well. Excuse me. IWM, weaker now. Bear flag, as you can see here, flagpole. And now we're on the underside of this lower trend line of this channel, and we are now literally just sitting here looking for a break back up. If this price action breaks back into the channel, this bear flag will fail. So we really need price to break below this channel of 89.45 for IWM to really produce a sell signal. But look at the volume here. One of the leaders, another one, low volume pull, low volume drift higher. So interesting to see what's going to happen in the next day or so. Don't forget we have non-farm payrolls come out on Friday, excuse me. So that should be interesting to see. Diamonds, literally nice big move higher, recouped all of this this red engulfing and has been on fire as well. Dow is a follower, so I really don't pay too much attention to it, but nonetheless you need to look at it. And here's the XLF. As you can see here, low volume on the XLF as well. And this will be interesting in the next coming weeks and months about the budget cuts. I'm going to really see watching this for a nice trade to see if we get a test and fail, and then maybe look to get short this in the coming weeks. Right now, there is no reason to be short any of the banks. And Apple. Let's talk about Apple real quick. I have the weekly back on here. As you can see, my notes for many, many months, I said 460 close. Could see potential of 420. We hit that yesterday. And then 352, and then 274. 275 would really be a little bit exaggerated, I would say. But nonetheless, these are the levels on a weekly chart that I want to point out to everybody. But we did hit our second target of 420. The next would be round lot support of 400. Obviously, that's just normal psychological barrier to look for. 400 and then really 352. But we did hit our target. Apple is in trouble. Nobody wants to buy it. Obviously, I like to buy things when nobody wants to buy them, and I like to short things when everybody wants to buy them. So the thing is, you can't catch a falling knife. You got to really have price confirm that, listen, we have a short-term tradable bottom here. This stock is only good for day trade. I would not be looking to buy anything. Like I said, many weeks and months, I've been preaching. I think Apple breaks 400, and that's when you really want to start looking to buy Apple. Now, I might be wrong, but I'm looking at price, and this is exactly what's telling me 420 we hit yesterday. Now, we could get an oversold bounce today, but let's just see. Don't be aggressive looking to get long. But Apple is starting to entice me to look to get long the stock. But again, I think it needs a little bit more work, maybe for a 1-2 day dead cat bounce. Here's the daily chart. And this is where I want to see Apple. Now, we broke out of this chart. If you see, if I take this away, you can see that we broke below the Bollinger Band. Now, we broke below the Bollinger Band here. And if you see, guys, what happened, we drifted higher and we actually tested this upper end of the range of 487. So this is exactly what's happening again. So we need to see Apple break down, reverse, and then we might be able to see another dead cat bounce flow into that 450 area. But again, only time will tell. Nobody knows. Only price is what's going to tell us, and we are now at this lower end of this trend line as well. So interesting developments. I like to see a real break lower on the opening, a big spike in volume, and then a reverse course and trade higher all day. That would tell me that we may have a 1, 2, 3 day bounce in Apple. Lastly, guys, is the Qs. Again, Qs are being held up real nicely by Google, making all-time highs. So Apple dragging it down, Qs bringing it, Google bringing it higher. So the Qs are just really being tossed around by the two big bellwethers here. All right, guys, that's it today. We're going to get some interesting developments in the next few days. Keep your palates dry. I know everybody wants to make money. We all do. But when the markets are really hard to read here like this, like it's been the last, God knows, the whole month of January, we just grinded high with no volatility. And the last 4 or 5 days of February, we got a couple of days of volatility with really no follow-through. So we've just been chopping around. Volatility is picking up, telling me that we may be near a tradable top. But we don't need to go out and just short the market. We want price to tell us. All right? Have a great day, everybody. We'll talk to you tomorrow. Take care.